Investors and traders, welcome to the channel Market Chart Pattern. Today is 31st of December 2024. It is the end of the year 2024 and we will be moving into the new year 2025 very soon. So I wish everyone a happy new year, a happy and prosperous 2025 for everyone, and all of you guys who are investing in the markets. Have a fantastic 2025 for your all the activities you get involved in. So we are going to do something a little bit different today on the channel. We will actually take a look at the yearly charts. It's very rare that we have to actually take a look at such long-term charts, but since today is the end of the year, the markets are closed right now, and tomorrow is a holiday, and the futures will then start trading from, I believe, 6 p.m. Eastern on the 1st of January 2025. So it is a good time to actually take stock and take a look at long-term pictures of how this year actually ended for different kind of markets. So with that, we'll start, and as always, this video is for educational purposes only and it is not a financial advice. So let's start by taking a look at the US dollar. So this is the yearly chart of US dollar. You can see it's 12 months here on TradingView. This is the charting package that I like to use for quite a lot of my work, but it's not the only package that I use, but it's really user friendly. So here what we are looking at, it's not a quarterly presentation, so I'm going to remove that. I like to look on quarterly basis as well, but this one is on 12 months as a yearly chart. So each candle is 1 year of trading activity going back to 1985. So we have quite a bit of data. We have had a look at this chart on just monthly presentation quite a few times, and something that I've been talking about is this symmetry. It exists at the bull market in the US dollar. Was about 10 years, which ran till January of 2001. And also what we have got now is the highs which came in January of 2022. It was about 12 years. And now something really significant about 2024 as we end 2024 and move into 2025 is that 2024 is just not in end of the year. It is also a end of the quarter century of this 21st century. Quarter of this century actually has passed. We have lived through 24 years, and then we are going to move into the next quarter. So that's an interesting part as well. So what my experience has been that whenever there is actually a start of a new decade or a close of a previous decade, around those times we have some really important events that take place. Those could be geopolitical events, and those could be some other kind of events, and we'll be actually in the middle of this decade. So we'll be actually starting the second half of the decade. So this is something really important for 2025. So look at this candle. In this one, what TradingView is indicating to me is that the dollar actually closed 7.18% higher. So very strong looking candle. It of course took the highs of last year, which is the 2023, but it remains within the mother candle of January 2022, which is the yearly candle 2022. So it is still an inside bar. So the dollar is still within this inside bar, and just think about this symmetry that exists here. Now, one of the really key things that we have been talking about on the weekly charts is that the dollar, as long as it remains above this 99 and 98 level, it remains strong. And although look at this run here, we had this top coming in 2001, but we had real good attempts towards making new all time, not all time highs, but new highs for the market, but those that did not happen, and the year actually closed lower. And then we had 1, 2, 3, 4, 5, 6 down years. I'm also counting it as down years because the low was taken out, and then this is around the 7th year when the dollar actually began to stabilize, and then we had a really nice bull market which started in the US dollar in 2011, and that has still been going on, although the highs remain below these highs, but the bull move has actually started since 2011. Now, what is really important is that for the dollar to really move higher and take these highs out, it really needs to get above the highs of 2022. And if we break below the lows of 2023, that's going to be actually moving below the low of an yearly close or yearly candle. That actually will signify that perhaps we are going to see a persistent change in trend and a persistent weakness coming into the US dollar, which could last quite some time. So this is what the yearly picture is telling us, and if it is able to get strong and take out the highs of 2022 even just by 1 penny, this means that the trend actually continues, right? So this is why the kind of information that we get from yearly candles is really very powerful, but it's only that we take a look at these quite rarely. All right, so now let's take a look at the bond market. So we're going to take a look at the 10-year Treasury yields. So this is going to be the symbol TNX. And we are looking at the yearly candles. So one candle is 1 year. We can see that since 1981, the yields have actually been moving lower, lower, and lower. So that's about 43 years roughly. 43 years that we have been in an environment where the interest rates have been actually moving lower. In fact, the absolute low came in 2020. So for a very long time, we have actually had interest rates falling, and then what we have going on now is something a little bit different, where the interest rates have been moving up for 1, 2, 3, 4 consecutive years now, with the big move coming in 2022. I think that's when the Fed raised the interest rates consecutively in their meetings, and some other central banks as well for their own jurisdictions. Now, what has formed is actually in 2024, it's an inside candle. So this candle is inside this yearly candle of 2023. So the trend still remains intact towards the upside. However, if we begin to take out the lows, especially on a yearly closing basis, this is something which we'll only find out when the year closes, when the year will close in 2025. If it closes below the lows of January 2023, then it could indicate we might have seen some sort of a peak in the interest rates, right? But right now, it looks like the interest rates are likely to move higher, but they are more likely to remain, just the way this candle is. They remain elevated. Maybe they take out the lows of 2024. Maybe come down a little bit further, but they are likely to remain elevated. This is what I decipher from the yearly chart. And look at this, where this is where the 38.2% retracement is, and if there is a chance that the yields begin to move higher, 6.3 on the 10-year is something which is 38.2% of this entire decline that we have gotten used to for a very long time. Okay, so now if we just take a look at this on the shorter end of the curve, and this is the 2-year Treasury note, look at here what happened. Boom. So because the short end of the curve is very sensitive to the interest rate movements, especially getting impacted from the Fed fund rates, we had a really big move of massive percentage increase in the yields for this one. But we have had something like this similar here as well in 1994. But look, here we had a move which had already started down, and you can argue the longer term direction of the trend has been to the downside. But here, what we are looking at is year 2024, where the market actually closed undecided. So it's like a doji formation. So the bulls and the bears, they constantly had a fight with each other, and they kind of decided to close pretty much unchanged. And what is really interesting is that after the recent Fed fund rate cut, the Fed fund rates are pretty close to the two-year Treasury note, what it is yielding. So Fed fund rates, they move in a 25 basis point window, so they come pretty close if you look at the lower end of it. So here, if we begin to get below in 2025, especially the lows of the 2024, that would suggest that perhaps we could see the two-year Treasury yields moving lower. But right now, we have a pretty much an inside bar. I believe the low was a little bit lower than this one. So here on the short end of the curve, I think the situation remains a bit undecided. Now, let's take a look at the gold futures. Here we go. So this is the yearly chart of gold. We have taken a look at this chart in the form of the monthly chart before. But here something really interesting to see is these candles, each candle is 1 year, 12 months. We have had a fantastic move which started somewhere in quarter of a century ago, so about 25 years ago, till 2011. Fantastic run higher, and then we had an inside year, which was the 2012, and then 2013 it was not good for gold. It took the lows out of the previous year, which is the 2012, and then a big massive move down for gold. I mean, look, it's been just going higher, and then we had kind of a mixed year. Then 2015 finds bottom. From 2016 starts to move higher. And if we look at how the 2024 was, so 2024 was really good for the gold market. In fact, if you look at the returns given out for the different assets, I did a video about this. I will update this with the latest data coming out of the year end, and I think over the weekend we'll just go through those figures again. Gold has been one of the asset classes which has actually performed better than the S&P 500. I think the one which is beating gold is actually the Bitcoin, but that move really came since November. Whereas gold started to really move since February of 2024. So just look at this massive candle. But look also, we also completed this big massive ABCD right here. We also have a smaller one right here. With this kind of momentum, if we are able to get above 2,800, like 3,000 is going to be the next psychological level to take a look at. But it is also a chance that gold actually might go sideways, something like what we saw in 2012 in 2025, and maybe a little bit lower. So we have some targets that we are actually taking a look at, but the gold actually remains pretty positive. Now, there is actually a correlation which exists between gold, which is between the 10-year yields. So I'm gonna bring the 10-year yields right here. Let's take a look at that. Here we go. So we can see that here. Now this correlation doesn't always exist. It just comes and goes. But what we are looking at is basically the gold price has gone up, but the yields have also gone up. That is something interesting to watch. Look, since Jan 2020, the gold also moving higher. The yields in 10-year also moving higher. So that's something interesting to watch. But these correlations, they come and go. It's not something that this correlation is not something that I follow on regular basis, but it's interesting to take a look at. And if we take a look at silver, here we go. So this is silver futures. These are COMEX futures continuous chart coming from the data of TradingView. Very different kind of a picture. Bullish yearly close for silver, but not as bullish as gold. So silver is also a base metal, so the definition is kind of sometimes viewed as a precious metal, sometimes as a base metal, but it's really used in industries. It's more of a base metal. of course it hit our kind of the targets that we were watching. There was a likelihood it could actually go and make new all-time highs, taking out these January 2011 highs. It's not the first time that silver has actually reached $50. It has done that back in the 80s as well, I believe. So pretty volatile metal actually. So here, same thing that we are watching here. Maybe we get an insight year 2025, only if we are able to get above the highs of 2024. Then it's got a chance, or maybe it's able to take a stab at the highs of $50. But it remains to be seen. It took out the highs of Jan 2020, which is bullish. Of course, a bullish candle formation compared to what the year was for silver for 2023, but right into our significant resistance as well. So this is what we are looking at in silver. Okay, now let's take a look at equity markets. And we'll start by taking a look at some of the foreign markets. So let's just take a look at the German DAX. Here we go. So this is the yearly chart of German DAX. Each candle represents 12 months, which is 1 year. And you can see that really nice, fantastic upward moving chart. This market returned about 18.85% in 2024. And in 2023, it returned about 20.31%, so slightly less than what it returned in 2023. 2023, if you look at this candle, it actually took out the highs of when it closed. On closing basis, took out the highs of 2022, which meant a bullish move. So 2025, if it closes with a close above the 2024 highs, it signals that the bull market continues. Also, in my work, if there's going to be an inside bar formation, that's also how it is formed will depend, but will also indicate continuation of the bull market. However, if it of course takes the lows out, that means that this really big bullishness that we have seen, maybe it's coming to an end. Something like this, which we saw here in January of 2018. It actually closed below the lows of 2017, but the following year what we had was an inside bar, and that inside bar was really interesting because the following year, which was 2020, we actually had a situation in which the lows of these years were actually taken out to the downside, and it represents, I don't know exactly how this tool is calculating this, what its base, but this is about a 40% move right here. There we go. So this is why it's really important to also watch these yearly candles. We actually typically watch them once a year because of the year end. So it'll be interesting what sort of a candle we get for 2025. If it is an inside bar, that will still do after a bullish candle, but if it's going to be a situation where the lows are taken out and we get a bearish candle, then we have to watch what the next year will look like for us. Then we take a look at the FTSE 100. So FTSE 100, you can see it's a very different kind of a market. It also returned about only 5.69% in 2024. In 2023, it returned about 3.78%. So the UK market is just not growing the way the German market is, and it's definitely not the way the US markets are. So that's an interesting point to take a note. So here again, it's still a bullish candle close. We'll see what 2025 will look like. But right now, it's a bullish close. Looks like there is further upside to it, maybe 8736. Now, let's come back to the US market. So let's take a look at the New York Stock Exchange Composite Index. Let's start with that. Here we go. And what we are looking at is, of course, the yearly candles. Now, the year closed, but there is a fair amount of wick at the top of it. It's not like we closed where we had a really bullish candle formation on the yearly basis. Some selling pressure came in December. Still, the market closed pretty positive because the wick is not about more greater than 50% of the candle's body. So that's one thing to note. Now, if there's going to be any yearly move to the downside, this is the 2024 low, so which we have to keep in mind, and that's quite a way low, about 3,000 points lower where the market pretty much closed. An inside bar, a bullish inside bar, in my opinion, will still be uh, would indicate the continuation of the bull. But if we begin to close below the yearly lows, that's when we need to pay attention, like a situation like this, and something really interesting which happened here in 2001 and 2002. Now I'm going to move to the Dow Jones uh, index, and here we take a look at the Spider Dow Jones Industrial Average. So this is an ETF, yearly candles. And here, this chart is quite similar to the New York Stock Exchange Composite Index. And here what we can see is that unlike the NYA, in the January of 2000, 2001, 2002, it had 3 consecutive years which were negative closes on a yearly basis. 3. So this actually, the recession which took place after the dot-com bubble, it was pretty prolonged. It took about 3 years for the market to bottom, which actually it did in 2022, but the yearly close was still negative. And then what we had was an inside bar. So 2022 is actually an inside bar. So let's take a look at the highs. 104.75 and the low is 74.31. 106.89 versus 72.03. So 72.03, yeah, so they were lower. So it's an inside bar, but a positive bullish looking. And the following year we had a really year which had small gains, but it took out the highs of the previous year and also the year prior to that, and we had a bull move right into 2007, and then we had the crisis starting, the global financial crisis right here. The markets dropped nearly 34% for this one, and then 09 is when the whole quantitative easing process started, and we have been ever since in a really big massive bull market. Now here the on this Spider ETF, it's saying that the Dow returned 12.9%, but we'll actually take a look at this on the actual futures chart in a bit. So here again, really positive looking candle, but it's got a wick. This year in 2023 there was no wick, so which actually showed pretty strong momentum. So this one selling came in the month of December, pretty hard selling actually in Dow Jones. So that is something we need to keep in mind as well. So let's see what the 2025 will print, whether it's going to print an inside bar, or whether even if it's able to take out the highs by 1 cent, that indicates a continuation of the bull. So we'll have to wait and see what the 2025 how it will close. Now let's come down to the cash S&P 500, and we'll also take a look at the future markets for this one. Here we go. So this is the market which actually returned 23.31% to the investors in 2024, which is really remarkable. I recall starting 2024, we came in bullish for 2024. We had our ABCD targets which actually got met in 2024, really longer term targets, and we were watching for the completion of those targets starting at 2024. The start of January was there's volatility. There were analysts coming out and saying, okay, we're going to have a recession in 2024 starting in second quarter, the second half of the year. That did not happen, and is a really bullish close. And the year prior was also the 24.23%. So we have had 2 consecutive years where the market has returned 24.23%. Now this is the COVID 2020 Jan lows. the year of 2020. Market returned 16.26%, but that was after a massive stimulus that the Fed had to give out. And the following year of 2021 was 26.89%. But in 2022, that bear market, actually this market lost nearly 20%. But there was just no follow through. Known this market's high was 4818 spot 62, and 4818 spot 62, and the previous year, which is a bullish year, the market's high was 4808 spot 93. So in fact it signals a higher move by just taking out the highs by a small bit, which actually indicates the continuation of the move. This is why we saw 2023 actually being a bullish year, and then the continuation of the bull. Okay, excuse me, just a sip of water. So let's see what the 2025 will bring for us, but because we have 2 consecutive years where the market has returned 20% plus. So it's a very interesting situation. Let's go back and see in 2009 when there was a stimulus, market returned 23.45%, 12.78%, pretty flat for 2011, 13.41% in 2012, 29.6% in 2013. That's really interesting. January returned 11.39%. Then we had 2015 flat, pretty much flat. We had 9.54% 2016. Then this is the first year of Donald Trump's presidency in the first term. Market returned 19.42%. 2018 minus 6.24%. I believe that's when the Fed actually indicated they will start tapering, and I think in one of their conferences they also mentioned they will actually it will go on autopilot or something like that. Markets really panicked. There was a big sell-off. I remember that. I wasn't doing the channel back then, but I was watching the market, of course. And then 2019 was fantastic, 28.88%. So here there's a bit of a pattern, and the pattern seems to be in this run that we have 2 really good years, and then we have a bit of a pause. Then we had 3 really good years, with one being extremely doing well, 29.6%. There was like a Goldilocks period. We had a bit of a pause. Then 2 really good years, 9.54%. Then double digit, 19.42%, bit of a pause, and then a fantastic double digit, 30% returns. So that's a really interesting one. So there is a possibility that we get a year which might be which might pause, but there's also a possibility if its market is able to get above the highs of the 2024, signaling a continuation. The year after 2025 might be a pause year, so it might be something like this, maybe something like this, and who knows, maybe something like this as well. So that's a possibility. So this is what we are looking at. The really interesting thing is that the market would be massively up since the lows of 2020, and after having really good years, double digits, 2 consecutive years of 20+% returns, as in S&P 500. Whether the momentum will continue for the 3rd year, so we'll have to wait and see now with the 2025 how it will close. Now let's take a look at this in the NDX as well. So this is the cash market for the NASDAQ 100 stocks, and here the key level to watch is 22,139. Even I'm penny above 22,139 spot 22 will indicate a continuation of the waves. And here, of course, NASDAQ was really highly impacted by what happened with the .com bubble bust. So here we go. and this market has returned 24.88%, so slightly higher than S&P 500, but S&P 500 is 500 stocks. A lot of them not really specifically technology, perform really well as well, so just make a note of that. And in 2023 it had given out 53.81%. That's amazing, but it also lost through nearly 33% in the prior year in 2022. So here, 2 consecutive really big years. Let's see if the tech continues to outperform or perform. We'll have to wait and see what the 2022 will do. Really interesting is gonna be the Dow Jones Industrial. I've already taken a look at the cash market. This is the futures. So let's actually do IWM, which is the Russell 2000 shares. So we can see that the Russell 2000 on the yearly is presenting a different picture, and we'll also take a look at the futures charts as well, but this is the cash one that I'm taking a look at. Now, the good thing is the market closed above the highs of 2023, but let's see if it closed above the highs of 2021. So the high was 244.46, 244.98. So that is good, because even if it goes up by 1 cent, that's like a continuation of the wave, so a continuation of the uptrend. That's going to be really interesting. But what I don't like is it has given back quite a bit right here towards the end of mostly coming from the month of December, and something like this had happened. Not sure what the sell-off was actually in December, but it had given back quite a bit, and then we had this a bear market move in 2022. But the good thing is that what it is indicating is actually continuation. So the chances are that these small caps will eventually make new highs. This is the way I'm looking at on the yearly chart, but we'll have to wait and see how it will pan out. 2025, maybe it ends up being an inside bar. If it takes the lows out of 2024, that's not going to be good. And on the futures, let's take a look on the futures chart. I believe the picture is very similar. Here we go. The high was 2477.1. Yeah, it took out the highs as well, so that is good in terms of taking the highs out. So I think you'll find this video interesting, because we took a look at really long-term charts, which we only do seldom, because typically we're looking at the yearly chart at the end of the year, completion of the year, or start of the new year. Then we take a look at the previous year. So this is how the markets have ended 2024, and let's see what 2025 will bring for us. I really wish and pray for everyone it will bring peace and prosperity for all of us. And with that, I'll leave you guys. So thank you very much for watching the video, and if you like the video and found this of educational value, then please do subscribe to the channel, and if you do, then hit that bell icon button. That way you will know when the new videos are posted and you will not miss any videos. Thank you very much. Good luck, good trading, and speak to you guys soon, and happy new year.